Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. How has the war in Ukraine disrupted e-commerce, and what does the future logistics models look like? Joining me to discuss is Guru Hariharan. He is the CEO of CommerceIQ, a platform that applies machine learning and automation across marketing, supply chain, and sales operations to help brands gain market share profitably. Guru, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Thanks for having me.
The impact to Russia's retail exodus is asymmetrical. What do you mean by that? And will a resolution create reinvestment back into Russia?
Jill, I think this is going to be having some impact in both the short and medium term, and also a long-term impact. So, a long-term perspective, obviously, we have to see how the macroeconomy sort of shakes up. It's obviously putting a huge stress into the supply chain elements of things. Supply chain's already been extremely stressed in e-commerce, and with a lot of the tensions that are happening in between the Asia Pacific line and trade, that is going to essentially have a lot more stress that's going to come in. It also is going to impact the issues with respect to shortages in supply chain because of the increased gas prices and all of that. That is causing a bigger impact in terms of in terms of the available supply for the e-commerce market. In e-commerce, we've been seeing a pretty big surge. We saw about 10% growth put into e-commerce in the last 3 years. Frankly, we were looking at about growing the e-commerce penetration into total retail to about 21% by in this year, but we are already at 25%. And we saw about 10 years of growth in just about a 3-year period. And because now the supply has essentially the demand has increased quite a bit, but the supply has not increased to that extent to keep up with that. And that is creating a huge problem for almost every brand and every retailer. And this macroeconomic situation is just creating this thing to be even a lot more worse.
How is the war in Ukraine impacting the cultural values of businesses and nations that do business with Russia?
Especially when it comes to consumer brands, obviously we are seeing a brand sort of having a almost like a dual mode in operating with Russia. And in the companies that we work with, we're seeing some companies who are completely empowered to pull out of Russia and send a signal. Some of them going with a franchisee model, they haven't been able to. Papa John's and McDonald's is an example of the two ends of the spectrum. In the CPG industry, we essentially see almost a relation to that. Would say what happens with counterfeits on Amazon marketplaces and other places. We're seeing an increased activity on that. Amazon's obviously been has been under the magnifying lens for third-party and counterfeit activities over the last 1 year or so. That has increased about, I would say, 20 to 30% for our customer base, and we suspect it's because of miscreants taking advantage of this. And so it just lays a lot more importance for brands to be a lot more focused in terms of how they're going to be taking care of that and countering those, not just with manual efforts, but actually using some machine learning techniques and being able to be ready to be able to address that through automation techniques and stuff like that. Not many brands are ready for that, and they're jumping into the bandwagon to see how they can respond effectively to this.
So, Guru, that leads me to my next question. How do brands manage reputational risk when third-party vendors continue to sell their products?
It is a big problem. Like if you look at a consumer brand, when they used to sell into a Petco or a PetSmart or a Walmart or a Target back in the day, they controlled the shelf, where the placement was, how it looked, all that stuff they were able to control. But now if you look at today, the shelf is a modern day digital shelf, which is essentially the search page or the product detail page when you go to an Amazon or Instacart to buy your favorite pet food or a toothpaste. Now, the reality is the brand doesn't completely control that. They are essentially using the digital shelf is how the retailer shows. Now, you as a seller, anybody as a seller, including a counterfeit authority, can actually go in and almost hijack that digital shelf and show their content, show their listings and things like that. And so it is a big problem. It's a highly emergent problem. Amazon's been having quite a lot of issues. Now, of course, they have issues on both sides. If they try to police it too much, then the FCC is not happy about it. On the other side, if they leave it too Wild West open, they start to see these sort of issues crop up. And the recent issues that have happened in Ukraine and Russia has just caused an increased amount of activity. And so brands just need to essentially get into this in a way that they're able to counteract to these things with the power of machines, rather than a human being trying to look at and walk through the digital shelf, trying to figure out what's wrong, who are the companies that are hijacking it. Can they deploy machines to be able to constantly monitor? Can they look at every product detail page every minute, every hour, instead of a human looking at it every day, and immediately raise it to Amazon, raise it to a Walmart, so that they're able to bring it down and keep the digital shelf kosher? It is a war of machines. It is a war of algorithms, as opposed to a war of humans, at least when it comes to e-commerce.
And Guru, to wrap up here, we already mentioned some of the longer term supply chain disruptions to the global economy, but I want to understand how this will impact the logistics models for businesses, because even prior to the pandemic, prior to the additional bottlenecks that Russia and Ukraine have inserted into the system, global logistics are incredibly complex, and we take it for granted every day when, free overnight delivery from, whether it's Rent the Runway, Amazon, whatever shipping service that you use in your daily life. Even that's hard to wrap your head around. So with these additional bottlenecks in the supply chain, help us understand what logistics models are going to look like going forward for global companies.
The question is not going to be how do you predict, but actually the question is going to be how can you be ready for supply chain disruptions? In the last 20 years, we have lived in a world where we got ourselves ready for what we call just-in-time supply chain. We talk about Toyota Kanban, or putting suppliers right next to your factory so that you can get the raw materials in when you're ready and all that good stuff. Last 20 years was building out that just-in-time supply chain. Next 20 years is going to be building what I call just-in-case supply chain. Things are going to break. There will be labor shortage. There will be a potential issue that nobody predicted, like a war in Russia. There'll be an issue with like something stuck in the Suez Canal and stuff like that. Federal rates are going to be something that you're not going to be able to control. So there are a lot of these edge cases, a lot of these just-in-case things that will end up breaking the supply chain. The question is going to be, are you ready to respond to that? And are you ready to respond to that in real time? You're not waiting for a week or a month or a quarter to be able to come back and get to a fire drill situation and figure out how to respond. But do you have systems in place so that they are able to at least address 80% of the issues that are emerging out of the supply chain? For instance, can you move your media investments towards something which is not going out of stock? Like, out of stocks are a big problem right now, especially because of the even accelerated because of the macro situation that's happening right now. But is that is that causing a fire drill? And as a brand, are we trying to sort of deal with it in a fire drill sort of a mode, or are the systems built in a way that they are operating in a seamless manner that they are able to respond to it through a machine? So the next 20 years is going to be really looking at brands and companies who are really built for resilience in the supply chain. That's what's going to be separating the good from the bad and great from the ugly.
All right, Guru, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.